Talk about interest rates. Let's get to yields. Obviously, they've calmed down. Do you think this is just a temporary sort of respite? Because, I mean, the fiscal profiles in the U.S., for that matter, over in Japan, are not looking good.
Look, Martin, we're going to have a risk-on day, maybe a week, maybe more, because Trump has backed down about his absurd militaristic type of ambitions. But it hasn't changed the underlying fundamentals, which is, you know, he has got tariff revenues of $180 billion. He wants to give $480 billion to U.S. consumers in the form of checks for every adult, and he wants to spend another $5 trillion on the military. Well, I mean, you know, the $180 billion doesn't fund those two things. So if you want to ask me where the budget deficit is going, you know, you could ask my little dog and it'll tell you it's going up. And that problem has not been resolved. It has not been resolved in Europe, where there are different reasons, and defense will be an even bigger one. It has not been resolved in Japan, where MS Takaichi has clearly got an idea about economics which escaped me in all of my education and 60 years in the business. And it certainly has not been addressed in the United States, where, to be honest, and with full respect for the office, but not for the man, I think Trump is talking absolute rubbish.
Goodness. Okay, which is why goes at least part of the way to explain why you are staying short dollar, as well as treasuries looking for yields to stay elevated, if not go even higher. On Japan, very quickly, you know, it seems like the situation at their long end is even more dire. There's been literally an explosion, a 5, even 6 sigma move. I mean, it was just like just eye-popping. Are you concerned that if she actually does win the elections, the snap election coming out on February the 8th, with a stronger mandate, etc., this could get even worse?
Oh, yeah, it could get much worse. In fact, my modest forecast, which is usually wrong, and therefore I counsel you against paying any attention to what I say, is that Japanese yields, Japan having worse fundamentals than Germany, will equate to German yields within a year, which means that at the 10-year level, you're looking at 290. And the reason for that is very simple, Martin. This lady is going to add between 3 and 4% per year to a stock of debt, which is 240% of GDP, and obviously this is not good news for the markets. So I think the likelihood is that she either wins the election and she goes ahead with these plans, which will not boost Japanese growth, it'll simply boost Japanese debt far faster than any growth, or alternative, she loses the election, and then Japan goes back to being governed by a load of ineffective and effete coalitions, of which she may possibly be a member. But it would be very bad news economically also for Japan, because it would be a time for no economic decisions when you need a lot of economic decisions to put Japan back on a fiscal course, which is in some way sustainable.
Do you think, David, that the BOJ has its back up against the wall right now? I mean, sure, they could intervene, right, to try and tame or cap the yield, but that would mean printing more money, which would, I mean, there's no way out of this. Then yen gets even weaker, right? Or are they going to have to go back to yield curve control? I don't know.
No, well, look, Martin, I mean, Ueda is a man who sometimes talks in Japanese terms, and remember we're talking about whispering at a tea ceremony. He sometimes talks tough, but when he comes to deliver, it's usually pretty soft. I don't think he'll do anything in this week's meeting. I think he may talk about doing something down the road. But the reality is the only thing he can do is tighten monetary policy, and the reason he has to do that is because inflation is way above his target, and it's damaging consumers because it is eroding their wage gains, and will do so more after the next shunto. Of course, the Prime Minister wants to print a lot more money and spend a lot more money, but you know, this is basically the big battle about central bank independence in Asia. Who is going to win? Is it Ueda doing the same thing, but too slowly? Or is it Takaichi doing something which I think is a kind of mini mirror of Donald Trump's fiscal policies?
We talked about Greenland situation, the Fed situation, what Trump has been talking about, and now Japan. Does that solidify make it even more bullish around gold, that central banks are going for gold, and perhaps bigger allocations will come through for gold, because that would make people want to avoid all the fiat currencies, because that's really the trend. No one is talking about spending less at this point.
Look, it's absolutely a part of that, together with a number of other things. I mean, central bankers do not want to own fiat currencies as reserves, because when you put money into a reserve, you're thinking 12 years, 15 years. And during that time, you're going to have a lot of things happen to fiat currencies, like happened to Russia, like the US's new brilliant idea of having stable coins, whereby, you know, the entire current account surplus of the world will end up in the US Treasury to fund the budget deficit. I mean, who the hell wants to get involved in that? So what will you do? You will buy gold, and the Chinese will help, because they'll internationalize the renminbi. They will have exactly the same surpluses as before. Half will flow into Chinese assets, which is why I own them. But the other half will belong to people who don't want to own any fiat currency, including the renminbi. And they will flow into gold too. That's the gold story. 6,000.
6,000. Greenland-related developments so far this year. Does that somehow entice or attract or introduce some of the European countries to do more business with China in RMB? Is that part of your premise?
Yes. Now, it's terribly unfashionable, because, as you know, the Chinese dual-use components are killing Ukrainians at the moment. So how do you do a trade deal and expand your interests with Europe if you're killing Europeans? But I would say the Europeans will ultimately move to China, because it is a counterweight to the United States, and it makes sense because the technology which Europe needs, i.e. EVs, comes from China, and it will come as investment. So that is the new block which will happen, and it will be a further isolation and diminishment of the power of the United States. And Martin asked at the beginning, well, what's the cost of what Trump did? It's nothing. Well, there's a cost. There's a cost.
Let's talk about the cost of oil, energy space. I feel like it's sort of, I don't know, squiggling to wake up a little bit after 3 years of bear market. Does Iran move the needle? Does something else move the needle? What's the direction for oil prices this year?
Well, look, I mean, you have all these nice countries in the Middle East and elsewhere which are busy pumping the oil as they get up every day, and they pump the oil and they go to bed, and then they get up again. They do the same thing. So that's kind of a stable forecast. What is different is Russia. People have decided, I mean the Europeans and the Americans, for different reasons, and far too late, have decided that all this Russian oil, which is scooting across the world to China and India, is not going to go anymore. First of all, they attacked the users, mainly India, of course, because nobody dares confront China, but it's actually much more important. Then they attacked the tankers, and that is what is happening. That's new, because that means that those whole 1.6, I think it is 1.6 billion barrels of oil in these tankers, it's frozen. So that reduces supply. Now, the other thing is, will the Iranians, as the regime declines, which it is declining, it'll be gone in a year, another forecast, then will the Iranians close the Straits of Hormuz? And the answer, in my view, is no, they won't. Partly because the mullahs can't, and secondly because the IRGC, they actually make their money out of shipping oil, their own oil, through the Straits of Hormuz, so no, they won't. The big thing is, if the regime in Iran falls and somebody reforms Iran, which will be easy, it'll make Venezuela look like a horror movie compared to the reform story of Iran, then Iran can pump 2 to 3% more oil than it does today, and that would bring down oil prices by 10 to 12 dollars.
But that would be after the very initial sort of hiccup and a lot of freak out over the oil prices.
Sure,
okay.
But it's partly supply, it's partly the risk premium goes down
Right.
if Iran gets back on course to being a civilized country.